Hey John, this is Ryan with TrendLizard.com. I hope you're having a good weekend. Thanks for sending me the email. I'm going to take a look at three stocks for you. A couple that we've looked at before, Montage Resources, Comcast, and then a new one, OKE, that we'll take a look at the end. So we're going to jump right in. We're going to start with Montage Resources, looking at this stock since its inception back in 2014. Again, we had looked at this one before. It's been in a large downtrend since its inception back in 2014. Started way up at 425, at least after all the splits and everything like that, and has gone all the way below 3 at its low in 2020. So it has had a very large descent. It has shown some life off the 2020 low, which we talked about last time. Gave us a really nice sharp recovery, over 100% return off of that 2020 low, and since then has been back and forth in a sideways fashion. So let's go ahead and zoom in and take a look at what's happened off of that low in 2020. This is it. I think last time we took a look at it, we were trying to figure out a way that this guy had given us a trendy up leg, which it does look like a trendy up leg off of March's low, and then the pullback is clearly a counter trend move. I think at that time we had called it a first and a second wave, but it's really had a tough time continuing higher since July off of that low. It had a nice up leg, then pulls back, has another good up leg, and then keeps pulling back. The result of this is that it has headed dead sideways, not dead sideways, but in a range at least since late April. It does not look like a series of first and second waves as shown here. What does appear to be happening, more than likely, is that this is actually a contracting triangle pattern as shown here. Now this is a bullish thing. I think one thing we know for sure, looking at this move off of April's high, is that it's a counter trend move, and the only sensible expectation, given that nice trendy up leg that we saw in March and April, is that after this counter trend pullback over the last several months, it's going to head higher one way or the other. Right now it looks like a contracting move. You can see it labels out as a nice triangle pattern. Triangles have 5 three-wave moves, as this one does, and it contracts like a triangle should. If a low is in to this pullback, and if it's going to head higher directly from here, Montage is going to stay above 490 at all times. If it moves below 490 at any point, it just means this counter trend move is going to continue. Triangles are tricky. I'll tell you right now, it's sometimes hard to figure out when they're going to end, just because that's the way triangles play out. It's not always easy to figure out where one three-wave move ends and the next one begins. So you got to be a little bit careful. But all you can do is basically test every up leg that emerges to see if it's the real deal. And like I said, if the one in November is the real deal, it will stay above 490 at all times. Either way, you have to expect another big up leg at some point. It's just a matter of timing. And like I said, test each up leg as they come, just to see if that is the one that is going to kick off the next big trendy 5-wave advance. So there is Montage. Let's go ahead and take a look now at Comcast for you, CMCSA, another one that we had looked at last time you had asked for videos. And overall, you know, Comcast is bullish. It still is. It's been in an uptrend since its inception back in 1988. Everything to the upside has been trendy. Every pullback has been a counter trend move. The move off the 2009 low is really the one under question, as it was last time. It's clearly a trendy 5-wave move. We're very comfortable calling the move off the 2009 low into the 2018 high a 5-wave advance. The question is then, what has happened since then? Has that 5-wave advance been corrected and now a new uptrend has started? Or is it still in a counter trend move, still correcting that 5-wave advance? So we're going to zoom in like we did last time and see what we can figure out. There's two possibilities. This shows the 5-wave advance and then a 3-wave pullback, thereby which ended then in 2020, and thereby kicking off a new trendy 5-wave advance in 2020. Very much a possibility. Let's look at the other possibility. The other possibility is that 5-wave advance completed in early 2018, and it is still being corrected by a big choppy back and forth move. There's no way we can say that this is not possible. If we can say that the down leg in 2018, the up leg in 2019, and down leg in 2020, if that could be a completed 3-wave move, so too could the move that's going on here. It could still be an incomplete move. It's just a little bit more of a runner, which it is no matter how you label it. So we need to be careful in that respect. Let's go ahead and zoom in and take a little bit closer look at the pullback off the 2018 low. This is what it looks like if it's a completed 3-wave move. You have your A wave down in 2018, a big B wave up in 2018 and 2019, and then a large down leg in 2020, From there, then, would the uptrend have resumed if it's over? So let's continue to zoom in and see how possible that is. This is what it looks like if the uptrend has resumed off the 2020 low. It's not the cleanest thing to the upside. I think we talked about this last time. There's a lot of leading diagonals that we have to go with here to call this a trendy move. The first wave 1 blue, would be a leading diagonal, and then the entire recovery into July's high off of March's low would also be a leading diagonal. That part's a little funky. After that, it clears up quite a bit. The pullback off of the July high is a clear counter-trend three-wave move. Since then, it has really kicked into gear in November. A very nice trendy up move since then that looks bullish. I mean, this up leg here looks quite bullish, and this looks like the start of something more important. This is what it boils down to. If Comcast has resumed its overall uptrend, it'll stay above 44 at all times. I think it's a very real possibility that it will. But if at any time it reverses and moves below that level, all bets are off. You really can't own Comcast. It just opens the door again to that large counter-trend pullback still continuing from that 2018 high. So I think you have to stay away from that. If we zoom in and just look at that advance off of November's low, just what's happened over the past couple weeks, it's a very clear, trendy, beautiful move to the upside. Again, a 5-wave move as we looked at from this larger time frame. So it looks bullish on that in that respect. You can expect some type of pullback likely because this up leg off of November's low appears to be completing. Needs to stay above 44 again. That is the key. That is all that really matters on Comcast. You can stay bullish on this guy as long as it's staying above 44. If it moves below that level at any point, all bets are off. Okay, John, let's go ahead and take a look at that last ticker you sent me, OKE. You said, I think it was a pipeline stock. I'm not quite sure how to pronounce it. Oneok, something along those lines. OKE, I've never seen it before. I want to take a look at it in two different ways. This is the look at it since its inception back in 1985. From this log scale, you would just look at it and think, man, this thing's been in this great uptrend since its inception, right? Looks like it's just continuing higher and higher. And overall it has. I mean, it's moved from 15 cents up to 75 over the course of a few decades, so that's not a bad thing. But I think it's better served by looking at this guy in a linear scale, and that's what this chart here does. And I think it gives it a little bit more credence to the big swings that you've seen along the way. A big up move in 2009, a huge pullback in 2014 and 15, a big up leg in 16, 17, 18 into the 20 high, and then it got destroyed in 2020 to the downside. So I think the volatility is a little understated when you look at this in a linear scale, but when you look at it in a log scale, it puts it into better perspective to show you the volatility and the risk that's associated with this guy. You said it's a good dividend stock. It may be, but if it goes from 70 to 10 over the course of a couple months, I'm not sure if the dividend's going to be worth the kind of damage that you're sustaining from a move like that. So let's zoom in and take a little bit closer look to see if there's a reason to be bullish on this guy despite the huge swings we've seen over the course of the last decade or so. Really, the most trendy move that we see on OKE is the down move that occurred in February and March of this year. And it looked trendy on most stocks, and a lot of stocks just reversed that to the upside. But OKE really hasn't. I mean, it had a pretty decent recovery in March, April, May, and June. But since then, it pulled back. It's traded sideways for months. It's hard to be super excited about this guy. It's not one that I personally would want to own looking at the chart. But despite that, let's say we just say, hey, what are the chances that this guy has put in an important low in March and then it's going to head higher from here? So we'll do everything we can to justify a bullish stance, okay? So we would have to call this a 5-wave move. It works. It's a little bit funky. And then a very long, drawn-out counter-trend pullback. It did find support around a 61.8% retracement, so that's bullish. But then action off of September's low has been slow. Pretty hard to get excited about this possibility. Despite that, let's go ahead and zoom in and look at what's happened off of September's low. It's possible. I mean, you can label it as a start of a trendy 5-wave move. It does work. Again, it's just it takes a lot of work to justify it. It seems like we're just trying to find a way to call it bullish by doing this. Despite that, here's what it boils down to. A move below 29 at any point on zero or OKE would be a bearish indication, and that would be enough for me to say, time to go. I don't like this stock. It looks more like it's in a counter trend recovery and not the start of a new uptrend. So a move below 29 is bearish. A move below 26.50 is the nail in the coffin, absolute proof that this guy is not in the start of a new uptrend. But already, I would say I don't think it is. There is a chance that it's going to recover and move back towards May's high as we get a large C wave up. But overall, it's just not a very exciting stock. What we're seeing to the upside does not look trendy. What does look trendy is the down move in early 2020. And it's hard to overlook that. It's hard to be bullish on this guy. If you're just seeking dividends, you can go with that strategy, but I can't tell you that it's supported by the Elliott Wave Theory from what we're seeing. So, hey, John, I hope that's helpful. Thanks again for being a subscriber at TrendLizard.com. I hope this stuff makes it easier for you to make investment decisions on these three guys. Have a great rest of your weekend, and we will talk to you again very soon. Take care.